Lavrov says we also agreed to create conditions to restore our cooperation in full. Lavrov adding that there was also high interest to lift barriers for economic cooperation. Lavrov adding that there was also high interest to lift barriers for economic cooperation. A reminder in about 10 minutes time we're expected to hear from ECB Cipollone. Speaking of the M&I live streamed Connect on ECB's balance sheet and its implications for monetary policy. No indication whether Q&A or text is to be expected. Germany's MDAX index rising over 1.2% to fresh near 19-month high.
I just wanna see, I just wanna see the light. I just wanna see, I just wanna see the light. I just wanna see, I just wanna see the light. I just wanna see the light. Even if it makes me blind, I just wanna see the light. Breathe in, leave it all behind. I just wanna see the light. Even if it makes me blind, I just wanna see the light. Breathe in, leave it all behind. I just wanna see the light. 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 Even if it makes me blind, I just wanna see the light. Breathe in, leave it all behind. I just wanna see the light. Even if it makes me blind, I just wanna see the light. Breathe in, leave it all behind. I just wanna see the light.
Good morning, folks. Hope everyone out there has had a good holiday break, assuming you got yesterday off. Either way, it is a momentous occasion. It is Taco Tuesday. The markets are about to open here in 30 minutes, and I think we're probably set up for some continuation of upside. We have broken above some pretty important levels that I've been watching and talking about on the Trader Aid Discord for both the S&P 500 and NASDAQ, and we are seeing some broadening out of this rally. So overall, a lot to like about this. But we do want to see how we do today. I've got a pivot level I'll share with you all, as well as my thoughts as we dive into Bookmap. But real quick, let's get through a couple of slides. So one thing the folks at Bookmap would love for you to join us on the Discord server. We've got a great community, lots of educational events to learn more about the product and the platform. You can do so by visiting discord.com/invite/bookmap or scanning the QR code on screen. A bit more about me. I started trading 20 years ago, and it's been an amazing journey, a very rewarding journey, both intellectually and financially. And that's why I really got involved with social, because I was fortunate enough early on in my trading journey to have some great mentorship, to meet some amazing people, and to really take a lot of the pain points away. That doesn't mean I didn't get hurt early on in trading. Certainly, cutting my teeth during the great financial crisis had its ups and its downs. But that acceleration I had early on in my journey and seeing the disparate outcomes I've seen elsewhere really motivated me to be more consistent, to be more of a systematic trader. So one second, I'm just seeing I'm having some issues on, looks like the Bookmap server is having some issues here. Let's see if this will cooperate now, maybe. Yeah, so I don't know what's going on the Bookmap Discord, but I am having some issues with the routing there, the WebRTC routing. So if you're not able to see it there, check the Bookmap YouTube or check the live stream on my YouTube. So we're going to go right along. Basically, one of the things that I really picked up along the journey of trading that I felt to be incredibly important to me was learning more about having data drive my trading decisions, being more systematic and less discretionary. And that doesn't mean not looking at charts, but it means getting into what's driving the chart, what's driving the price action. Why are we seeing this kind of momentum? Are there signals that we can use that may give us an edge? Right. So that's one of the reasons that I really became more of a systematic trader, because it takes the emotion out of trading. And that's generally the crux of the weakness that most of us experience. Now, why do I watch order flow specifically? First, order flow allows me to get a bit of a better understanding as to what some of the larger parties in the market are doing, how they're transacting, where there may be aggression on one side or the other. And so watching for differentials, or what we call deltas, that's one part of what I do in systematic trading. When I'm looking at order flow analysis, I'm looking for those really large deltas, and I'm looking for one side to get offsides. Often is the case that, for example, if you see a really large sell delta on the session volume profile and price moves 5 or 10 handles above that, and those sellers are getting further and further away from being on the right side of that trade, they can become motivated buyers, right? And that can lead to a potential reversal. So it's understanding how that, that order flow and that positioning can impact price discovery is one of the things that I really pay a lot of attention to as a trader, because I feel like it helps me to gain a little bit more of an understanding as to what their motivations are, why are they placing these trades, and then how might I be able to take advantage of that? Is there any situation that's arising from that where, I might be able to gain an edge? And so that's really the motivating factor behind, using deltas in order flow analysis, right? There's other things you can glean from that as well. Sometimes at reversals, you'll see one side get much more aggressive. Particularly, you'll see that in the bubbles inside of Bookmap. That is showing you the volume of what's transacting. So that's another area that one can pay attention to. And then looking for exhaustion is another thing that I find to be quite valuable in my trading. Just finding periods where one side is just transacting so aggressively that it actually gets them to the point where they don't really have any ammo left. I've developed some indicators to identify exhaustion, and we have those on our Discord. But you can also see some of the signs, especially if you have the MBO data package. You might see, exhaustive stop outs, right? You might see a whole bunch of stop run order flow happening at the same time, and then price starting to move the other way. That can be another sign of exhaustion as well. So why do I use Bookmap? Well, I find Bookmap to be a really helpful part of my trading for my day trading. I do trade across multiple time frames, so I think it's very important to be clear about that. But I find Bookmap to be really important for the kind of trading that I'm doing, where I'm looking at trend days, where I'm looking for scalp opportunities, where I'm looking for other situations where there may be a greater opportunity to take advantage of the flow, of what may present itself as, let's say, for example, you come in and you have a 20-minute opening range breakout to the upside. You've got a lot of very powerful options flow and the call side of things that is also pulling things higher. I can visualize all of that in Bookmap and make my trading decisions just really looking at that flow. And that's what's helpful for me overall, just to be able to see that flow, to be able to make more informed decisions on the basis of what I'm seeing there. So that's one key area. The other is really just being able to build tools easily. So I have several tools I built for Bookmap, like the SPX options visualizer, the exhaustion indicator, the absorption indicator. All of that has been really helpful for me to be able to gain a better edge, really using Bookmap to define a lot of the risk thresholds that I'm willing to take, where I want to execute, where there's liquidity or interest on the other side. So that can be helpful as well. Now, going into today's tape, the pivot level I'm watching is 61.1175. That's 61.1175 on ES. And we are above that pre-market, and we are implied to open above that. So that's really going to be the key level that I'm watching. Again, 61.1175. Above that, more inclined to take longs on a day trade and swing trade time horizon. And below that, more inclined to take shorts on a day trade and swing trade horizon. And a couple of special deals before we get into Bookmap. Get up to 40% off of Bookmap visiting traderaid.com/bookmap. That's traderaid.com/bookmap. Scroll down to the special offers and get up to 20% off of TraderAid using the code Mayhem20 at checkout for a limited time. That's Mayhem20 visiting traderaid.com. Going to Discord to sign up. You can use that code at checkout. All right, so that covers the intro, and we're going to get right into Bookmap here and talk a little bit more about what we're seeing leading into the pre-market session. But just give me one moment. I'm just going to check on a couple things on my end before we dive in. Got just about 18 minutes left until the market open here. I'm just doing some quick checks on my end. All right. I believe that I am here and connected. Dan did some changes on Bookmap side, so let me just make sure I can get the visuals going. And Dan or Steven, if you guys want to message me and confirm you can see and hear loud and clear that everything looks good. All right, we are good to go. So, awesome. Sorry about the brief pause there, folks. I just want to make sure that everyone could enjoy what all I'm trying to share. So, good stuff. Appreciate the team there helping to sort that out. They just basically moved the Discord stream over to East Coast and was able to connect again. So, with that all being said, let's just check in on a few things. So we talked about the 61.1175 pivot for today. We are still watching that level as we get into the trading day. I just want to calculate the delta real quick so we have that as well. So let me just rerun that script really quickly because we had a holiday yesterday and that kind of throws things off a little bit. All right. So, just taking a quick peek here. Delta is going to be about 20 points, basically. About 20 points between ES and SPX. So that 61.1175 that we're looking at in ES, if you're an SPX trader, you're basically looking at 60.91 around there. And we'll have a more precise delta once the market opens. I'm just doing a recalculation here on my end now as we wait for that. And overnight, really not a whole lot to look at here. Mostly sideways action. We did again have a holiday here in the US yesterday, so there wasn't a whole lot of trading going on. I believe we had a half day in equity futures and the stock market was completely closed. So we're coming into today largely off of Friday's close. And the best thing about where we are today is really we've pushed above a number of key levels. We talked about the 61.1175 pivot. We've also pushed above SPX 6100. 6115 has become a really big level on SPX as well, which is interesting, and I'll just share that chart with you guys here. And we also just have some of the usual suspects. So 6100, 6000, 6150. Those are all pretty important levels to watch going into today as well. So here's our chart of the most important SPX options levels that we'll be watching today. And I'm just going to put that out on social as well so folks can find that. And the biggest thing that I want to remind people in the environment we're in right now is be aware that the kind of headline risk we have now is much more akin to the trading that we had from 2017 through 2021, early 2021. That is to say that at any moment you can see some pretty crazy stuff come over the tape just because there's a new headline that's come out. So just be aware of that when you're trading. Don't take on too much size, because at any moment, even if you're right on the direction, you can get shaken out by one of those kinds of events. And that's something that, if you were trading back then, you're aware of. But if you weren't, and you started like during COVID, when a lot of people started trading, that kind of headline risk that we're seeing these days is, it adds to intraday volatility. It doesn't necessarily add to the VIX, right? It doesn't mean that looking out 30 days, the implied volatility is higher, but it does add to intraday volatility. It can make the market a little bit more illiquid. It can create more potential for whipsaws. And that's why I feel like it's more important to just look at smaller size overall when trading a market like this, so that you can take a wider stop and, ride through some of that vol. And if you're on the right side of the trade, awesome. You don't get pushed out of that trade. So we don't have any big macro data today overall. We just have a couple data points that are coming in that are lesser important. We had New York State manufacturing that came in better than what was expected at 5.7 versus a previous reading of -12. We have the NAHB housing market index, a couple of Fed speakers, some bill auctions, but really not a lot going on in terms of data today. So that's not really going to be our catalyst. I think it's going to be more about what do we have going on from these headlines, and also what do we have going on from the overall flow in these markets, which has been largely constructive. And it's interesting because retail folks like us have become much less bullish on this market, significantly less bullish on this market. I'm going to bring up another chart real quick just to show that things have changed quite a bit, I would say. So this is AA. This is a pretty reliable survey. And you can see where we are right now. This is the lowest levels we've had since October of 2023. We have to go all the way back here to see the bear versus bull ratio that low, which is pretty incredible if you think about it. That's not at all what you might expect, given the market near all-time highs. There's a lot of really powerful bullish signals that we're seeing underneath the surface, and yet retail folks are just not having it. The bull to bear ratio is 0.6. So that basically tells you there's 1.4 bears for every bull on AA. That's, again, the lowest in over a year. We have to go back to October of 2023 when the market bottomed from another sort of brief selling cycle to see a low that low in sentiment. That's constructive. That's kind of what you want to see, right? You really do want to see a market that is not very optimistic to become optimistic if you're more contrarian like me, right? You don't want everyone on the same side of the boat when you're about to try to get on, because it could topple over. So seeing folks kind of capitulate a bit, seeing managed money positioning coming down, some of the other areas of speculation becoming less frothy, that's constructive. And there's always going to be a wall of worry to climb. So if we are to continue higher, there's still going to be those negative events, those stories that shake people out so they have to buy at higher prices and so forth. And there's still plenty of that going on underneath the surface as well. You've got corporate bankruptcies hitting a high over levels that we've seen in more than a decade. That's certainly concerning some people. You have inflation creeping back up. That's certainly concerning some people, but that doesn't mean that it's all over for the stock market. And I think that's one of the problems that folks have, qualifying what's a tail risk versus what's a big risk off moment that's with some level of surety, right? As investors and traders, we should always qualify tail risks. And a tail risk is something that may or may not happen, but we should be aware of. And if it did happen, it can amplify, in this case on the left side, downward risk. That's what inflation is. That's what downside earnings risks are. That's what an economic report that comes in much better than expected in an environment where we want the Fed to cut. So we're looking for weaker data. That's sort of what that is. But a bigger left tail risk is something like a large trade war, and the unrealized impacts of tariffs, how they start to trickle through the system. That doesn't mean that risk knocks the market lower. It means it's a risk we need to understand, so that if it does begin to have an impact, we can plan for it and we can navigate around those changing and evolving circumstances. So I just want to kind of put that out there as just a bit of a thought as we get into this trading day, because there's just so much going on right now. And I feel like there's some folks out there that are always looking for the tail, and they're kind of missing the bigger picture, which is we're still in a bull market. There still are opportunities out there. And, yes, there are tails we have to be concerned about, but we shouldn't define our existence by them. We shouldn't be looking for a down day every day. We shouldn't necessarily be trying to fight a market that's overall designed to move higher. And yeah, there could be some shoes to drop here. Rando said, I think people are waiting for the shoe to drop on tariffs, deportations, and government layoffs. I agree. There's some potential. You could have some shoes drop from this stuff. I would be most concerned about cutting government spend meaningfully when it's been one of the biggest contributors to some of the upside economic data we've had. So you cut too much out of the government, and that's been a really big catalyst for upside. That's going to have an impact, right? And that will have an impact on overall labor market data, overall consumption trends, certain regions that are heavy with government employees like the DC region and their real estate. There certainly will be impacts, but is it sort of like a universal risk-off event? I'm not so sure. I think it may be more selective in its impact unless it becomes sweeping. I think the bigger risk we have is that if they cut government spend too much and then other areas of the economy also slow down, then you could really start to see a situation where if the Fed doesn't step in and reduce the cost of capital, you could have some pronounced economic slowing, or God forbid, even some contraction. Yeah, Loki says, thank you, Mayhem, for bringing that up. I can't tell you how many times when Trump said something or tweeted something, I got stopped out. It's insane. So yes, this is exactly what I'm talking about. And it's a flashback for me because I traded through his first term. And this stuff would happen all the time. You'd be, dealing with like a normal trend day, everything looked honky-dory, and then he'd come out and out of left field, he'd tweet something that would rattle the market. And all of a sudden you'd just get this like, out of nowhere 20, 30 handle drop on ES. And then you'd eventually reverse out of it because a lot of the algorithms that parse this stuff get it wrong the first time. Their handlers have to come back, kind of sort it out. Maybe if they came in and sold positions, the handlers that are managing these algos have to come back in and buy that stuff back. So the biggest thing I would say is when you get a reaction to him, a lot of the times it's overdone and then you have a reversal the other way. And that's one reason why it's also important not to have too much size on, because you might see another opportunity. Like if you have a flush because Trump says something crazy and the market doesn't like what it heard, that flush might be an opportunity. That flush might get you, the ability to bid at a much better price or the ability to offer at a much better price. And I think that's something that's really important to take into consideration too. Like we can and we should. I know we're not used to this because it's been so many years without this type of, event-driven volatility from random headlines, but we should endeavor to take advantage of it. I actually wrote a whole guide last week on the Trader Discord about how we could take advantage of it, how we could try to identify, sort of the bottom of a Trump tweet or headline induced sell, and how we might be able to take advantage of that reversal, and also how we might be able to take advantage of the headline itself if we're nimble enough. So if you're a Trader Aid member, check that out. It's just from about February 11th. I posted that. Or February 10th in the evening, I posted that as a part of a market prep. But the reason that I'm talking about that is, we're in a different paradigm. Regimes change often, especially for us day traders. Like for swing traders and investors, it's a little less of regime change that happens. But for day traders, it's much more frequent. Another thing I'd be remiss not to mention is this is options expiration week. And so in options expiration week, you do have to expect that you're going to have, first, a lot more positions that are rolling off or changing positioning. And these are positions that just have to be rolled off or they have to be, rolled forward. You have folks that aren't just looking at charts. They aren't just looking at headlines. They just have to simply roll positions. And so you're going to have your setups work less on a week like this. That's an important thing to remember. So if you have a setup that works all the time for you and you get an options expiration week and you can't figure out why it doesn't work on these weeks, or you just haven't noticed, but now you're starting to put it together that options expiration weeks are weeks where it doesn't work as well, that's why. Because you have tons of folks that are simply moving positioning around, right? And they're going to keep moving that positioning around until they finish their roll or whatever they have to do. And that may not make sense with what you see on the chart. It may not make sense with what you see in order flow. But that's how options expiration weeks are. And so that's another reason to be a little bit more careful with your execution and your setups this week, right? You've already got the headline risk factor. You'll also have the Opex roll, which is going to change things quite a bit. Now, going into today, skew is elevated. It's not very high, but it's elevated enough that we could get some elevated Vanna and Charm flows, particularly first and last hour of the day. That's something to pay attention to. It creates a sort of implied bid under the market. And we can see as we approach market open, less than a minute here, we do see some pressure coming in. So it'll be interesting to see if these flows help to buffer that just a bit as we get into the U.S. trading session. And folks, if you have any chart requests, symbols you'd like me to look at or otherwise, let me know. We can start off with the big picture and we can zoom in. We got a question from Usman. Markets and Mayhem, why do you say major level to watch 61.11.75? I don't see any order block there. Good question. So I say that because I've written a dynamic pivots program that analyzes both intraday and long-term timeframes, and 61.11.75 has been repeatedly identified as a key pivot across multiple timeframes. So this goes a little bit outside of Bookmap and into some of the pivots that I use, and that's where I'm drawing that line from. It's from the pivot levels that I've created. They are available on the Trader Aid Discord throughout the trading day, throughout the week. But that's where I get that level from. And these pivots are pretty darn actionable. So I would definitely pay attention to them. Let me see if I can just bring a chart up on screen for you to see. All right, here we go. Listen, if you look on screen, you could see that 61.11.75 pivot here. So that's what I'm talking about, right? We have received a buy signal on that last move lower into the Ichimoku cloud, just above the 59.28 pivot. Now we're above that 61.11.75 pivot. You'll note the several times we have moved above here, there's some supply up here. So we've seen sellers. So it's going to be very interesting and important how we resolve that during today's trading session. Do we see some continuation higher? That's what we really want to see today. All right, I've got a request for Meta, so give me a moment here. And markets are open. We are seeing a little bit of a pull in S&P. All right, so ships, here is Meta for you. Just pulling this up on TrendSpider. And yeah, this is a pretty powerful looking chart. It broke out of that rising wedge pattern we talked about, I think maybe 3 weeks ago or so, and just has been continuing to run. We do see the MACD histogram momentum is rolling off a little bit. It's still constructive, but it is rolling off a little bit. So we just want to be aware of that. Let me take a look at a couple of other things for Meta. So when we're looking at these charts, I want to go in and also look at the gamma exposure on Meta. And this is rendered like with the most current options data. So when we're looking at Meta, I'm going to look at some of the net gamma levels, see where there's the most interest by some of these traders. And on Meta shares right now, if we're looking at the options, there's a lot targeting 750, right? That's a wall of calls on Meta. So I would be looking at 750 as your next major resistance level, and 715 is your major support level. And then just under 750, you've got 740, which is a smaller area of call exposure on Meta based on the options. Now, if we're going to zoom in to the price action this morning on Meta, we've got it here. Overnight, pretty much chop as one could reasonably expect. And then getting into today's session, we've got some pretty major liquidity. So we have a lot more interest in bids than offers on Meta. So that means there is interest in lower pricing here. And if we zoom out, we can see that the larger bids are around here, around 725 to 730. There's a pretty chunky offer zone, sort of like a bid zone, sort of like a floor right under Meta of all of these bids. So it'd be very interesting to see if sellers have enough supply to chew through these bid zones. So far, they're starting to do just that. But if we do take out 725, I think that's where you might see a bigger reaction of continuation lower. So those are my thoughts on Meta. Let me know if that is helpful for you, ships. Jason S. asks, do you find that we trade in the chop zone during options expiration week, meaning pinned? I would say that it's much more likely that you have that scenario. It's not going to happen every Opex week. There's going to be, varying catalysts that can kind of break us out of being clenched by gamma exposure. But we definitely can see more opportunity for gamma clenching or market pinning during options expiration week. And if we look at where that gamma exposure is right now on SPX, and again, I'll bring this chart up, just give me a moment. But there's a lot of interest around 6,100, 6,150, and 6,000. Those are kind of like the big gross gamma levels. And then the call wall is up there at 6,200. So give me a moment. I'll pull that up right here. And so you could see there's that really big chunky range of gamma exposure, pretty much through 6,000 through 6,200, but 6,100 is the big magnet level. And it kind of feels like we're already getting pulled back to it a little bit here this morning. So let's see how that goes. It's important for us to hold above that 6,100 level on a closing basis. Otherwise, we do get reasonable opportunity for continuation lower. But in a nutshell, yes, pinning or gamma clenching is more likely on options expiration week. Market surge. You know what? I used to use it back when it was called Market Smith, Jorge. And I think it's cool, but I also feel like you can get the same kind of value on a lot of these other scanners as well. TrendSpider's got some great scanners. TradingView's got some great scanners. FinViz has some great scanners. There's like a ton of different sites. So the problem that I had with Market Surge was just I couldn't justify how much their subscription was versus being able to replicate it on other services that I already had. So I like Market Surge. I used to use it when it was Market Smith, but I was able to replicate a lot of the stuff that I was doing there elsewhere. And so I don't really want to have too many different you know, areas and I'm looking for the same kind of signals. So I don't use them as much as I used to. I don't have a subscription with them. Maybe do a quick BTC update. Sure, let's take a look at Bitcoin. First, we'll look at it on a longer time frame here. Let's see what the best symbol for Bitcoin is on TrendSpider as well. All right, we'll use one of these contracts. It's essentially a derivative. So it's a story of where people want to trade. If we're looking at this chart, right? We can see that on the volume profile for Bitcoin, we're pretty much stuck here at the high volume node. And that's where a lot of people have wanted to transact, sort of between 95 and 97,000. There's just a lot of interest in transacting here. You can see it on the chart, but it's really especially pronounced here on this high volume node. You can see that's where price is right now. That's where there's been a lot of transacting in the past. MACD histogram neutralizing some of that negative momentum. Doesn't look quite bearish, doesn't look quite bullish. Looks like we're continuing to consolidate in search of a direction. I would say if we zoom out the chart a little bit more for Bitcoin, it is starting to look a little bit heavy here. So if we can't hold this high volume node and build higher, we do have a low volume area below where you could get very quickly pulled into a volatile trade, right? This is an area where folks don't want to or haven't wanted to transact as much. So when you see a breakdown, if that happened, it can get very violent. You can have a head fake lower and push back above like a beach ball being kind of held underwater, or you can have a sort of continuation move where you get pulled into that area, you sort of move above, get rejected, and then start getting pulled into the lower, even larger area of the volume profile. Again, you need to zoom out to the weekly chart to see that. So I'd say right now, Bitcoin is in a decision zone, right? In the sense that we've got to see whether folks want to hold above 96,000, 97,000. If they can break right back above 100,000 and build some acceptance up there, I think it looks better. So someone asked, so up or down? I mean, you're stuck here. Your guess is as good as mine. I'd say momentum favors buyers. We've been in a long-term uptrend. Structurally, we're still in a long-term uptrend. But I would be remiss to try to front run Bitcoin and tell you exactly what it's going to do next. I don't think anyone knows that with any certainty. I'd say the odds favor buyers, but if you break below 95,000, start getting pulled in this low volume node, all bets are off, right? And on the other side of that, if you start to break above 100K and you build acceptance up there, I think you could get to new all-time highs. So I'd say for now, odds are probably 60-40, favoring moving higher, but I wouldn't be too aggressive on this trade. Every time you get up there, there's supply. People want to sell out of their positions. So let's zoom in on Bitcoin a little bit in today's tape. Ships, I'll pass that feedback along for sure. I just got your message. Yes, helpful information. Are you able to ask Bookmap to turn on or turn off the timer feature on live comments? I will pass that right along. So we are seeing Bitcoin, like US stocks, a little bit of pressure today. Again, really need to hold that 95,000 level or it starts to look precarious. And guess what? I'm not the only one who sees that. You can see where some of these bids are below. There's interest from buyers, 95,000, 94,500, and 94,000. And we're going to do a quick walk around some of these mega cap stocks this morning as well in just a moment. I just have another question coming in. Jorge asks, would you recommend TrendSpider better than Market Surge? So personally, I like TrendSpider more than Market Surge. I find that there's just so many different tools that I can use in there for charting, for backtesting, for analysis of options flow, for looking at fundamentals, for multi-time frame analysis. I think it's pretty cool. And so if you're interested, you can check out my link tree. I put that at the top of the chat. There is a discount for TrendSpider going on as well that you can take advantage of. But yeah, I think it's overall better. That's one of the reasons I kind of moved away. I like Market Surge. I like what they're doing over there, but I feel like their tool hasn't really evolved in quite a while. We are seeing some more pressure on Bitcoin here as well. It is continuing to sell off from the open. So overall, it is looking like we're getting kind of pulled deeper into that same area of the volume profile we're talking about. So here's that volume profile on Bitcoin. Again, we don't really want to drop below 95,000. Things start to look really hairy below there. So if we start to make that pull lower and we start to build more acceptance below, it's going to look more and more like we're going to get pulled into this low volume node on Bitcoin. So let's look at some of the mega cap stocks. Apple here, this is interesting. Apple has a lot more interest in higher prices today. You can see that with these offers overhead, a pretty incredible offer over here at 250, 451,000 on offer. That's largely driven by market makers, probably in the options complex. 250, a pretty big strike for Apple as well. So if we go through and we look at the gamma on Apple, and I'll have that in just a moment, 250 is likely a pretty large strike on that. Been asked, can I look at Tesla stock? Sure, I'd be happy to. Let's zoom out first. So let's zoom out even more. We'll just get to the weekly chart first, then we'll zoom into the daily, then we'll go into Bookmap. So for Tesla, it looks like we had this sort of parabolic ramp. A lot of that was the excitement of Trump winning and the presumption that this is going to be really good for Musk's businesses. And initial signs are it will be. Musk spent about $175,000 or $175 million, I should say, supporting Trump, and has already got about a $400 million contract implied from the State Department to buy armored electronic vehicles, which we're assuming are likely Tesla, and then another $350 million contract for SpaceX. So, if he put in $175 million, he's already basically 5x'd his investment in about a month, right? You could be cynical about that, but I do believe politics, it's sort of like a game of the price is right. You pay the right price, you get what you want back, and it's typically a 5 to 10x of your initial investment in the form of lobbying. And that's no joke. That really is often how politics work at the local, state, and federal level. So for all those aspiring lobbyists and corporate titans out there, you generally get a very good ROI on lobbying. That being said, for Tesla stock, I think it's settled from these levels where it got kind of obscene. I remember talking about it when it was getting all the way up there, that, things were getting a little bit stretched. I think now if we look at the options positioning in Tesla, and I'm just going to bring this up real quick from Market Chameleon, you can see we're slightly bullish. We're nowhere near any extremes. So these were some of the extremes we could see earlier last year, basically right after the election, you got to an extreme. And then going into this year, right after the inauguration, you got to an extreme of call side bullishness. We're not there anymore. We're back into sort of neutral territory. So I think Tesla looks overall constructive. We've had this primary uptrend. We've reset some of the excess. I think we could move higher just on the momentum. But I would say there are some pretty big tails that we need to watch for on Tesla on the left side. One is their business is imploding. Their car sales are down all over the world And that's not a great sign. And you can certainly get government contracts to help to make up for some of that, but it's not going to bridge the whole gap. There's been a lot of brand destruction from Elon Musk's sort of craziness, if you will. The other part of it is if you look at the last quarter of earnings from Tesla, what made up for the lack of earnings from car sales was an appreciation mark to market on their Bitcoin holdings and carbon credit sales. I'm not so sure that either one of those are things you could sort of hang your hat on. So I think Tesla, from a fundamental perspective, is in serious jeopardy, but the momentum overall looks decent here on a weekly chart. Looks like it's sort of reset, basing, and possibly moving higher here. You could watch that 21-week EMA. The stock seems to respect it overall as a momentum gauge. And if you're looking at Tesla shares on a daily, it's different. It does still look like the sellers have an upper hand on the daily chart. You have lower highs and lower lows. So that is a downward trend. And we're sort of starting to base out around this higher volume node here. So I'd say if we start to break down below that volume node, you see the last head fake was bid, then we're probably getting right back to 275, 300. Otherwise, if we can base here and really in particular push above 365, then I think you're off to the races back to about 420 a share. So again, a bit conditional. Weekly looks stronger. Daily looks like it's still resetting, and we still need to see sellers kind of give up the ghost, buyers take control again. And this MACD histogram still in negative momentum territory. So that's what I'm looking at on the weekly and the daily. Now, if we look at Tesla stock intraday here, we could see we're closer to the lower end of the trading range. We could see there's more interest in higher prices today. There's a delta of about 1 million between offers and bids. And you could see just overhead 360, 365, 370, 375. Those are some larger areas of offered liquidity, but it's really 400 with 161,000. That's an area to watch as a major area of supply, just based on the overall chart here. And let me see also one last thing, if we can just pull up some gamma levels for Tesla real quick for you. I'll get back to those in just a little bit. We're still calculating some of that stuff from today. Originopolis, are you talking about TrendSpider when I looked at Bitcoin via TrendSpider? Like, let me know if this is what you're talking about here. And I know you got to wait a little while because there's like a timer on the chat. So hopefully that can be something that is addressed in time. But this is TrendSpider, and if you guys are interested in TrendSpider, you can check out my link tree. It's the first thing that I posted in the chat. Well, second thing I said welcome, but it's the first link I posted in the chat. And I do have some discounts on TrendSpider going on right now as well. But to set it up like this, you know, if you do end up getting TrendSpider, just hit me up, and you know, I can help you with that. And then with the bubbles, yeah, so that is Bookmap. And again, I can help you set this up if you get Bookmap. First of all, visit TraderA.com/bookmap. Scroll down to the special offers. You can get up to 40% off. So you don't have to pay full price for your first quarter or year of global. You can visit TraderA.com/bookmap. Take advantage of that awesome discount. And this view is something that I set up. Not all of it is out of the box, right? There are some things that I did to kind of set up the view this way, but a lot of this is the out of the box capabilities of Bookmap. So if you do end up picking it up, let me know. And then next time I come on live, you know, I can kind of walk you through how I've set things up. And just using Bookmap data for the Bitcoin futures contract. So, you know, if you pick up Bookmap and your main interest is just Bitcoin, you can get the Bookmap data package. It can cover futures in a variety of areas, S&P, NASDAQ, obviously Bitcoin, some of the other leading cryptos. It's a great package, especially if you're shorting, if you're trading shorter time frames, right? If you're really looking at intraday trading, I feel like Bookmap is a game changer. I got just about 9 minutes left on the stream here. Remember, I will be back next Tuesday at 9 a.m. Eastern as well. Ships asks, teacher, I was just wondering how you got so smart. I've been studying charts and markets and trading for 3 years, but every time I attend your class on Tuesdays, you have such intelligent info. Well, thanks. That's really kind. I appreciate that. You know, it's really just a relentless appetite for upping my own game. So I always have this sort of very humble notion that as much as I know, there's always more to learn. And finance is sort of like an infinite beach of knowledge, right? You can only grasp so much sand in your hands. You can only control so much information and be aware of so much information at any given time. But there's a limitless amount to learn, right? It's this limitless beach of knowledge. And so I'm always exploring. I'm always digging. I'm always trying to find new ways to improve my approach. One thing that's helped me a lot is journaling my trading. Over time, I think journaling's been a game changer, kind of knowing what works and what doesn't work and why. Over time, I've become much more systematic because of that. I think the other thing is just having this sort of thirst. You know, I really want to quench this appetite for knowledge. And so I'm always out there learning, studying, coding, researching, backtesting, trying to figure out better ways to approach the market, trying to figure out new ways to extract value. And then I think the other thing is just being patient, realizing that this is truly a marathon that we're running here and that we have to be patient with ourselves, right? We can't try to get to the goal right away. Like the goal might be financial independence, it might be wealth, it might be, quitting our day job to become a trader, whatever it might be. We don't rush the outcome. We have to be patient with our progress. And that also means, how we manage our risk. Making sure we always have capital to come back the next day, looking at this as a business where we're just buying and selling inventory and hoping to capture the spread. A lot of it is mindset. And if you're running trading like a business, which by the way, you should, in my opinion, then you're going to realize that one of the most important things is getting better and better at that business, identifying setups, executing on setups, managing that risk, getting that reward, and repeating that, making that a consistent process. And if you don't understand how or why you're making money in the market, then it's time to take a step back and create a process that we can comprehend, that we can understand, because that's what creates consistency and repeatability. So I feel like a lot of my strengths just come from taking the approach I take towards really running any business, which is always look to how you can improve, always manage your risk and have guardrails in place so you're not going to be able to, basically upend your business in a single day. And always be humble that no matter how much you think you know, there's more to learn. And find what works for you. There's a lot of folks that try to just copy other people in the market. I don't think that's a good approach. I think it's really about finding what works for you. We're all wired differently. We all have our own strengths and weaknesses. And while we can endeavor to address our weaknesses, our strengths are some really amazing things that we can lean into oftentimes to become better traders. Some people are really, really good at trading a sideways market, trading that reversion. Other people are really good at trading trends. Other people are really good at trading swing, but they can't do day trading. And then other people really good at day trading and can't do swing. I happen to be fortunate enough that I can do swing and day trading, but I'm not really a big mean reversion trader. I'm much more of a trend trader, right? So having that awareness, just like knowing that I do better with a systematic approach than a discretionary approach. Those sorts of bits of awareness are also part of enjoying the game, because once you know what you're good at, you can build on it. And you can keep building on it. And it's not about what's that guy doing over there and why is he doing so well? Or who's this guy and I should follow them into their trades blindly. No, it's about figuring out what works for me. How do I make money consistently? Because at the end of the day, this is your financial destiny, right? So you should be impassioned to take control of it, to do better, to be able to enjoy the journey. And if there's one thought that I can imbue upon all of you to take back and to keep really just remembering and going back to throughout your journey and trading in other areas of life. Don't focus on the goal. Enjoy the journey. Enjoy the process of getting to the goal. Make the goal a destination that you coincidentally get to. Don't focus so much on it. Create milestones along the way. Have expectations of yourself. That's fine. But if we're myopically focusing on the goal, we're not going to enjoy the journey. And the journey is the most important part of this and just about everything else we do in life. It really is the journey. And the journey is getting better, right? It's having each day be an opportunity to improve our capacity. And I think that's the most important lesson I can give you all is enjoy the journey. Focus on the journey. Have that mindset where you enjoy learning, where you want to become better and better at what you're doing. Because that's where the depth comes from. Like you might ask, well, how does Mayhem know X, Y, and Z? It's because I love this stuff and I immerse myself in this stuff and I can't get enough of it. So it's yes, I've amassed a lot of knowledge and acumen and skill over time, but it's because I love the journey. It's because I love the process of learning. It's because I feel like there's always an opportunity to get better at the game. And so I can do this for 20 years and I can tell you, boy, I've learned a lot, but I know over the next 20 years, I'm going to learn even more and become a better trader. And I'm going to enjoy all of those steps of improving, all those milestones that I accomplish as I get, and that's the other thing about focusing on the goal, by the way. Your goal over time, your goals in life, in trading and otherwise, they're going to evolve and change over time. They're not going to be the same thing now, 10 years from now. So that's the other thing is if you focus too much on the goal you have now, you're going to miss the bigger picture. That what you want out of life will also evolve and change and adapt in time. So that's the big takeaway. Low-key, that next one's coming up. Going to be March 5th for the next episode of Navigating the Markets. That'll be March 5th. Going to have them on a monthly cadence now because really there's just not enough happening week over week to provide that level of depth. So monthly makes more sense. And that way I can really cover what I'm looking at in terms of opportunities and otherwise. So I want to thank everyone for tuning into this episode of Back to the Futures with me, Markets and Mayhem. Talked about a lot of cool stuff today. Looked at the big picture, then zoomed into some of these individual charts. Had a lot of fun with you guys. Hope to see you all next week, Tuesday at 9 a.m. Eastern. And, bring your chart requests, bring your questions. This is as much a journey of learning about Bookmap as it is learning about trading and the markets. It all feeds together, right? So appreciate you all. Hope you all have an awesome rest of your trading week, and I'll see you all next Tuesday.